Hi, and welcome to our March 5-minute tax update. The main aim of our tax updates is to brief you on the most important tax developments during this month. So here is the countdown clock, and let's start. The Cyprus Tax Department informed the Institute of Certified Public Accountants of Cyprus of its intention to terminate the application of the pre-agreed minimum profit margins of 0.125 to 0.35% on qualifying intergroup back-to-back financing arrangements with effect from 1 July 2017. From the above date onwards, all tax rulings confirming the applicability of the above profit margins on intergroup back-to-back financing arrangements will cease to be effective. Thereon, applicable taxable profit margins on such back-to-back financing arrangements will need to be supported by a transfer pricing study based on transfer pricing rules to be issued and which are expected to follow the relevant OECD guidelines. The Ministry of Finance, together with the Institute of Certified Public Accountants of Cyprus, are currently in the process of drafting these guidelines. Late last year, revised tax incentives were voted for promoting investment in innovative business. With regards to the practical application of the incentives, the Ministry of Finance has recently released guidelines with regards to the practical application of the law, which are in the Greek language, application form that needs to be completed and submitted in order for an enterprise to qualify as an innovative SME, and guidelines with regards to the completion of the business plan. For the purpose of calculating the notional interest deduction for the tax year 2017, the Tax Department has recently published the 10-year government bond yields rates for the following countries as at 31 of December 2016. Following an announcement by the Tax Department on the 8th of March 2017, the date that the law will come into effect, which will allow taxpayers to pay their overdue tax liabilities in installments, will be determined via relevant notification to be issued by the Commissioner of Taxation. The announcement goes on to clarify that the applications to the scheme will only be accepted electronically via the governmental portal Ariadne. Therefore, those interested will first need to register to the Ariadne portal so as to enable the authorities to validate their details and provide them with the relevant authorization to use the portal. In addition, a taxpayer will need to ensure that all relevant tax returns for all tax years are submitted prior to applying for the scheme. It should be noted that the application must be filed within 3 months from the date the law enters into force. Let's now look at some important circulars issued during this month. A new circular on deemed distribution was issued on the 2nd of March 2017, amending Circular 2006-1 following the introduction of the domicile regime for individuals. Specifically, the new circular clarifies that the deemed dividend distribution provisions do not apply in the case where the shareholders of a Cypriot company are Cyprus tax residents but do not have their domicile in Cyprus. The new circular also provides that companies of which its shareholders are individuals and do not have their domicile in Cyprus are not obliged to submit the Form IR 623 form regarding deemed dividend distribution. Additionally, it provides that in the case where the shareholders of a company are non-Cypriot residents, the correct completion of the forms IR 42A and IR 42AQ is required. A new circular was issued on the 10th of March 2017 stating that an individual is able to request and be issued with a tax residency certificate during the first half of the tax year, even if he or she has not completed 183 days in Cyprus during the specific year. The certificate will be issued provided that the taxpayer has a tax identification code and that he or she submits a declaration that he or she has the intention to stay in Cyprus for more than 183 days. On the 13th of March, Circular 2017-4 was issued regarding the embedded income on qualifying IP assets under the new intellectual property tax regime. The circular states that in the case where a tax return is submitted in which a company claims an 80% exemption in relation to embedded income, the tax return of the taxpayer should be based on a transfer pricing study which should support the level of embedded income and should be available to be submitted to the tax authorities upon request. We will close off our tax update with a brief reminder of the deadlines coming up. Today is the last day for the submission of the corporate income tax returns for the tax year 2015. Late submission carries a €100 penalty. 30th of April is the deadline for the submission of the 2016 personal tax returns by salaried individuals whose gross income exceeds $19,500 for the tax year 2016 and who choose to submit their tax return manually and not via TaxisNet. 30th of April is also the deadline for the payment of the first installment of the premium tax for the insurance company's life business for the first quarter of 2017. This concludes our webcast for today. Thank you for watching.